Day trading the foreign exchange markets can be an attractive proposition, particularly for those who are new to trading, because, for example, of the volatility that we can see in these markets throughout the day. But there are some pitfalls to be aware of and some points to consider before day trading FX. So in this video, I'll go through those. Then, of course, we'll jump on the platform and see if there's a couple of short-term trades to do. Hello, I'm David Jones from Capital.com, and I thought we'd do one of our educational videos on trading FX or day trading FX. Day trading traditionally means in and out during the day, no overnight positions. So it's one of the more short-term approaches to trading. Now, if you've watched any of the videos on our channel and the trades that I do when we're talking about markets, you know I'm not the biggest fan of short-term trading. I like to run a position for days, sometimes weeks, to try and catch the bigger trend. But, for some people, day trading has its place. So I thought, well, let's go through some of the pros and cons and things you need to consider when day trading FX. So as usual, I've picked out a few key points. We'll run through those, then we'll jump onto the platform and see if we can set a couple of trades up. If you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. It means we can continue to push out lots of interesting and varied content throughout the week, from different markets that we look at to the more educational videos like this one. Right, let's get into it and go through some of the points we need to consider before day trading FX, and then we can go onto the platform and have a look at the markets. So first of all, I think it's an obvious one, but when you're looking at the foreign exchange market, one of the things you would want to consider is, well, which markets am I going to trade? In theory, any currency, one currency, can be traded against another currency. So there is a whole massive range of markets, but you probably want to focus. So perhaps to start off with, you look at the major FX pairs. Let's say you start off by looking at pound against the dollar, euro against the dollar, dollar against the Japanese yen, or even the dollar index, the dollar against a basket of other currencies. And maybe you just want to focus on one market. So I think one of the things to decide at the beginning is, well, how many markets am I going to trade? How much time do I have to watch them? And do I want to be perhaps a specialist in one market rather than trying to be a generalist across all markets? So we'll take a look at some of the markets available when we go on the platform. Then, of course, we need to think about what time frame. So the purest definition of day trading, as I said at the beginning, you're in and out during the day. You have no overnight positions. So you're looking for relatively short-term time frames. So you might be holding a trade. Perhaps you think you're only going to hold a trade for a few minutes, or then perhaps at the other day trading extreme, you're going to put a position on in the morning and run it till later in the day. Okay, so again, you need to try and decide, how active do I want to be in this market? And one of the reasons I'm not the biggest fan of day trading is I think there's a lot of noise during the day. So for me, I like to try and trade the big trends. So that's a decision I've taken for my own trading. And then if you're going to day trade, you need to think, okay, what sort of time frames am I looking for? How big a move am I looking at during the day? Then on the subject of trends, markets do trend during the day. Of course, we can see a move that starts in the morning, UK time, then carries on. Perhaps we see, for example, the euro strengthen all the way through to the New York close. So you do get trends throughout the day in markets. So then I think you need to decide, if you're day trading, am I going to be a trend follower? So am I going to look to jump onto a trend and ride that trend for as long as possible for a few hours? Or am I going to be a trend fader? So am I going to see an extreme move in the market, perhaps in the reaction to some news, and go the other way, take the view the market has overreacted? Both views are valid, I think, particularly on short-term timeframes, because again, you have that volatility, you can get extreme reactions. So again, you need to decide, well, what's my trading strategy in this market? Then we'll have a look at orders. We'll have a look on the platform, look at orders. I think it can be too tempting if you're watching the market and the market's really moving and there's a lot of volatility to just jump into that market and get sucked in just to buying or selling wherever the market is trading now, only for the market to reverse. So using orders can help your discipline in what can be something of a frantic and slightly stressful environment when it comes to trading. If you're looking at these short-term movements, if you have definite levels where you want to buy or sell, using orders can help enforce the discipline and take some of the emotion out of short-term trading. And finally, and most importantly, risk management. Just because you're short-term trading doesn't mean that risk isn't important. It's arguably more important than ever, because it'd be too easy to get carried away, do loads of trades during the day, chasing perhaps earlier losses, and rack up much bigger losses than you're thinking of. So as ever, if you're putting a trade on, you need to have an idea of, okay, well, if it goes to here and I'm wrong, I'm going to get out for a manageable risk, manageable loss. Okay, so weighing up risk management, absolutely just as important when short-term trading. But as usual, to illustrate some of these principles and perhaps do a couple of trades, let's take a look at some of the FX markets and see how we might go about putting some of this into practice. So let's start things off by going through some of these points I raised in the video. If we look, first of all, markets to trade, if I scroll down on the left-hand side, you can see most traded in foreign exchange. If I click on dollar, I can trade euro dollar, pound against dollar, dollar yen, Aussie dollar, US dollar. Scroll down, dollar against South African rand, dollar against the Hong Kong dollar. There's a whole host of markets I can trade. So I think it's important, first of all, to decide, well, what markets are you going to trade? And for me, I would suggest starting with some of the major markets. I've got here euro against the dollar on a 5-minute chart. So this is the last couple of days of euro dollar. Quite a bit of volatility there, I suppose, broadly sideways overall. And I might take a look at pound against the dollar as well. There we go again, quite a bit of volatility. So the market has been as low as 118.90, as high as 120. So it's moved slightly more than 100 points or so over the last couple of days. So again, plenty of volatility there. Then there's the time frame. I'm looking at 5-minute charts here. I mean, that for me is absolutely the lowest I would go. But if you wanted to, you could look at 1-minute charts, of course. So every minute it starts drawing a new candlestick on the chart. So at the time of recording, these are the charts going back about 4 hours on pound against the dollar as a 1-minute chart. For me personally, at the lowest I would go is 5 minutes, and I'd probably have a look at 10 minutes, to be honest. But, again, I think you can see the trends, the support, resistance, those sort of things. The next question is, are you a trend follower or a trend fader? So I've got dollar yen here. I flipped to another market. So if we went to yesterday on dollar yen, we can see the market, this is the dollar falling here. The market is falling, falling, falling. So a great trend from about lunchtime UK time all the way into midnight. So the market dropped about 180 points. Okay, so there's a great example there of a trend that started throughout the day and carried on trading. So you might think, okay, am I going to jump on board this trend? And the other thing you might want to do, if I look at euro US dollar, so euro US dollar has fallen heavily this morning. So dropped from 102.10 down to 101.30. So moved about 80 points this morning. But I might take the view, oh, the market's overreacted. So actually looking at where it is now, I might take the view this sharp sell-off was an overreaction. So if I'd have been watching it this morning, I'm going to fade the trend. I'm going to go against the trend. When the market stabilizes, I'm going to be a buyer. So that's fading the trend. Similar thing back here when the European central banks raised interest rates. The European Central Bank raised interest rates this week. Market sells off quite sharply. These are 5-minute candles, don't forget. So sells off for half an hour, then stabilizes. So taking the view, oh, the market has overreacted, could be an interesting strategy there. So if I'm going to take the view that the market today has overreacted, so it traded as low as 101.30, I might decide there's a new trend that's being built in euro US dollar and be a buyer. So I might decide to be a buyer now because I think the euro is going to go on to recover throughout the rest of the day. Okay, so the initial sell-off was overdone. I've seen this new trend forming. I might want to be a buyer of euro, which brings me to the next point, which is using orders. So I might take the view, I wish I'd bought the euro down at 101.40 when we had that initial sharp sell-off, and I want to fade the move. I'd like to buy into this new trend, but I don't want to buy here. I want to buy a bit lower. This is where you can use orders to make your trading perhaps a little bit more disciplined. You know, if we bring up our little trend that's been going since 7:30 this morning, so about 4 hours. So I might want to be a buyer into this trend, but I want to try and buy a bit lower. The market at the moment is 101.65. I'd like to buy if it drops back to 101.50, back near that trend line. So I can sit here and watch it, but perhaps if I'm watching other markets, I don't want to sit here just staring at euro, US dollar. So I can leave an order to buy at 1.0150 in this place. So the order will sit there. You can see it there on my chart. I just need to decide how many I'm going to buy, but the order sits there for me, which brings me to risk management. Very important, because what I want to also do is have a stop loss. Okay, even when day trading, you know, you still use stop losses. Most people don't use stop losses. Most people are losing traders. So I might decide to be a buyer at 101.50. I can see the low for the day is about 101.30. So I'm going to go 101.20. 20 is my stop on euro, US dollar. So if I buy 5,000 at 101.50 with this order, with a stop at 101.20, 30 points away, the other side of the low for the day, my risk is £12. I might decide from a day trading point of view that I'm happy to lose £100 on the trade. So if I bump my size up, there we go. So now if I buy 40,000 euro, if it drops to 101.50, about 17 points lower than where it is now, using an order, and leave a stop loss in at 101.20, then my risk is going to be £100. Let's place that limit order. So that order is going to sit there now on the euro, and we'll see if it gets filled. But I mean, those are the points. So just to recap, what markets am I going to trade? Don't try and trade everything. I would suggest focusing on a few markets. What time frame am I going to be trade? You know, you can of course look at 1 minute charts, but I think the problem is you might just get tied up in the noise of the really short term charts. There's that trend on the shorter term chart. So for me, the lowest I'd normally go is a 5 or 10 minute chart. Are you a trend follower? We've got a nice trend going now. Or are you a trend fader? We had that sharp move early on, and the market has reversed part of that sharp move. So both approaches are definitely valid, but I think there's two easy strategies to think about when you're day trading FX. And use orders. You know, I've got that order in at 101.50 on this market, so I don't have to sit here and watch it. And risk management above all else, absolutely critical. We want to be out of trades when we're wrong for a manageable loss, and stick with the winners for as long as possible when we're right to rack up the profits. That's it for this slightly different video, looking at things from an educational point of view. Hope you found it useful. Don't forget to subscribe for more useful stuff from us. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your trading. For more trading videos just like this, please subscribe to our channel.